Imagine waking up and seeing your investment portfolio fall 30% plus. I know, it's absolutely crazy. Well, guess what? That happened to me this past week, because here in the US, the stock market is absolutely melting.
Markets around the world are plummeting.
Investors are reeling after a dismal day on Wall Street.
Nearly every stock on Wall Street is down.
The biggest daily percentage loss in about 2 years.
And all three main indexes
plunging further down.
U.S. markets picked up where Japan left off.
The Nikkei index fell by more than 12% at close, the biggest one-day dip it has seen since 1987.
Those stocks tumbling over fears about
The U.S. economy could be sliding towards a recession after a rough finish last week on a weaker than expected jobs report.
The U.S. unemployment rate, it jumped to 4.3% from 4.1% previously. The number of unemployed people in America jumped by 352,000 people to 7.2 million.
The biggest one-day point drops in Wall Street history.
But here's the thing, my friends. Most people would run in fear when they see markets crashing like this. But the best of investors are the ones that see this as an excellent opportunity. So in this video, I'm going to unpack everything you need to know about what's causing today's market downturn, but then also help you see some of the opportunities that I see to invest in the market. What's up, guys? This is your boy, Kenny Finance, and today we are diving into something special. We are having a conversation to unpack what is happening with Mr. Market. That is right. We are diving into markets, and understanding what is causing today's downturn and why I think this is a golden investment opportunity. And you're probably asking yourself, why the heck should I listen to this goofy curly-haired kid when it comes to the stock market, when it comes to my money? Well, look, I'm not a kid anymore. I'm kind of getting old. Additionally, I've spent 10 years working in finance at the best of firms. Morgan Stanley, Blackstone, KKR. And one thing that I do know is how to invest, how to understand markets, how to understand businesses. And that's what I do literally all day, every day. When it comes to being overworked, I get overworked in the markets. So I love this stuff. I live and breathe finance. And my mission is to help you all think about ways to make smart money moves. And we are in a really pressing time of a market falling where you need to be making smart money moves. So let's dive in. And today's edition is something very special. I saw the markets crashing, I got my camera, and I was like, the streets need to hear this. We need to unpack everything there is to know about how to play the markets when things don't go our way. Because stocks don't always go up all the time. There's gonna be moments, there are gonna be months, there's gonna be years where there's a down bear market. It's just natural. But the thing is, you need to go into these seasons well-equipped intellectually to know what to play, what not to play, and how to have a sound investor mindset when it comes to deploying capital. So let's dive right in. Number one, what is causing the market to crash? Ladies and gentlemen, the stock market is essentially a quantitative output of what is happening in the business and economic community. When things with jobs and companies and revenue, anything is good, stock market usually goes up pretty well. But when times are bad, everything's crazy outside, the stock market usually reflects that. So if you see a downturn in the stock market as steep as what we're seeing this month, usually something macro-related is driving that. So let's unpack what that is. Number one, slowing US economy. So the jobs report came out and it showed that new job creations, meaning new folks that are getting new jobs, has slowed. That's not good. And additionally, we're seeing that unemployment, not extremely, but unemployment is slowly rising as well. That just simply means more people aren't working. And that's not good for the overall economy. And when less people are working, that means there's less productivity in businesses, and overall output for companies could potentially decline. Because the heart of a business is its workforce. And if you don't have a sound workforce, businesses don't perform well. It's that simple. Number two, technology stocks are cooling. Now, they're not actually cooling like in a freezer, but these hot stocks, companies like Nvidia, Microsoft, Meta, these were the companies that were driving majority of the earnings growth and the stock growth in the stock market over the last year. You can see companies going up 50% over the last 7 months, 60% over the last 7 months, ridiculous returns for these very hot tech companies. But things are slowing down, margins, or like how profitable a company is, are coming down as well. So that means a lot of these tech companies, their stocks are falling as well. And if majority of the stock market gains were driven by these tech companies and the tech companies fall, the overall market will slowly follow suit, given how much is weighted in technology stocks today. And one very clear example, everyone's favorite stock, Nvidia, has been on an absolute tear year to date for 2024. But in the last month, the stock has literally fallen 22%. And FYI, when you're thinking about having an investment portfolio, you should not have 100% tech stocks, because if the entire tech sector falls by 50% plus at the end of this year, you'll kind of be SOL. So what you want to do is have a diversified portfolio of tech stocks, industrials, consumer, financial services, so that if one sector goes bad and one does really well, you're kind of evenly balanced out. So that's first and foremost. Make sure that you're very, very, very well diversified. And my third reason why I think the stock market is crashing today is interest rates. And interest rates are set by the Federal Reserve, and they recently came out and said that they are not going to cut rates today, but instead they will potentially explore it in their September meeting. Now that's bad, because when interest rates fall, stock markets usually go up because things are cheaper to borrow, you can spend more money on other things, you can afford houses, you can afford business loans, etc. So keep that fundamental theory in mind. Rates fall, stocks usually kind of go up a little bit, or economic growth goes up. But the key here is that we expected rates to fall around this month, but Fed said no, we may do it in September. And they said no primarily because everything that's happening on the jobs front and every other macro indicator for the economy isn't as good as they expected. So with the Fed's decision to not cut rates today and potentially explore it in September, that's causing a little bit of panic and a little bit of fear in the market, because they're trying to sense, are things actually that bad in our economy today? So there you have it. Those are the three reasons why I think the market is reacting poorly to everything happening in the world. One, we have bad job reports and higher unemployment. Two, tech stocks are cooling. And then three, the Fed is likely going to cut rates in September instead of today. And with all that, you have a stock market that's going through a really bad attitude problem right now and costing me a lot of money. But I'm not tripping, because now we're going to dive into the segment where I unpack why this is an opportunity. But first and foremost, this is an opportunity if you have a little bit of cash. Now, fundamentally, Kenny teaching moment, I want to let you know one thing. When markets are falling, you do not sell and panic. That's not what we do. Like the Kenny finance community, we have guts that we can withstand a storm or sunshine, all right? But especially when markets are falling, do not sell out of fear. But instead, view it as this. If you have cash, discretionary cash, after you've taken care of your emergency savings fund, after you've taken care of all the other essential bills and you started budgeting, if you have free cash flow that you can put into the markets today, I want you to think about this setup here. You have stock market, technology stocks, cryptocurrencies, all that are falling at rapid rates day after day. And there's eventually going to be a floor or a bottom, and you could buy some of these attractive assets at really, really, really attractive entry points. It's literally just like you were going into Best Buy and you wanted to buy yourself a fancy new Sony a7 III camera, which I'm recording on this right now. So you had a fancy new camera, but it's like too expensive today. You wait a week, you wait a month, and you've seen that prices have fallen 30%. You would buy it, right? So view it that way. If there is an asset that is quality and the business is really good, and you've done your diligence and you've done your research to show that the company is going through a little bit of a time right now, macro-wise, economic-wise, but it's still a really good company, just at a cheaper price, that is an opportunity to acquire and buy more of those assets. So what I'm doing in this season, I am in buy mode. That is right. I am looking at this as an opportunity to invest and buy some of my favorite assets in this season today of the stock market, going through a little bit of an attitude problem. And I think also this is an amazing opportunity because I am following one of the philosophies of the greatest investor of our generation. Matter of fact, of all time. And that is Mr. Warren Buffett. And Warren Buffett had a very, very, very simple quote that says, "Be fearful when people are greedy, and be greedy when people are fearful." And what that means is when the stock market is going through a little bit of a panic and things are falling a lot, people are very, very fearful, this is your chance as an intelligent investor to be greedy, to buy more, because attractive assets are at attractive prices. Because you look at the stock market over time, it has averaged a 8 to 10% return every single year. Now, years go up where it's 20%, years go down where it's like down 1% or zero flat. But the thing is, stock market usually goes up and to the right over the long-term horizon. So little dips of what's happening this week is not going to last forever, and those stocks are going to go back up eventually. And you want to know why I'm also pretty bullish in this market? Is because if you look at Warren Buffett's business, Berkshire Hathaway, which is one of the largest buyers of stocks in the world and one of the best indicators of like investor sentiment, Berkshire Hathaway has been piling up in cash. Like, why are they holding cash? They're holding cash because they potentially see the markets coming down, stocks falling, to buy assets at a lot of attractive, cheaper prices. Literally, he is sitting on almost $200 billion of cash. And I'm thinking that he's thinking that this is an amazing opportunity to put that $200 billion to work in the markets today. So if he's sitting on cash and he's waiting for this thing to fall and he's thinking about buying a lot of good assets at a cheaper price, intelligent investors like you all in the Kinney Finance community should be probably doing the same thing. So strategically, I want you all to try to have as much cash as you can in this downturn. So save and budget wherever you need to do to free up more investment cash. And then also, I want you to think about what are the stocks, what are the companies that you love that have done really well, that have very sound business fundamentals, and that is a really good stock performer that you think you want to get into. I'm not going to tell you what stocks to buy. I just don't sell that kind of advice. But I will tell you is I want you to explore and do the diligence of finding the sector that's really good, find the company that's really good, and do the readings of their annual reports, their websites, look at their products to see, is this a sustainable long-term winner? That is right. Do you want to buy from this company today? And then you'll want to buy from this company 5-10 years from now. Because those are the businesses that you likely want to invest in when the market dips, because those are going to have long-term, pretty good compounded returns. So that's it. I want to give you guys a quick glimpse of how I'm thinking about the markets today. Don't panic. Things aren't going crazy. It's just having a little attitude problem right now. But markets fall, but they always come back. And if you are smart, I want you to follow that Buffett philosophy of be greedy when others are fearful. So if you enjoyed this video, I want you guys to make sure that you hit that like button, leave me a comment, let me know what you think is a really good investment opportunity in the markets today. And as always, subscribe to the channel and to the community because it means a lot. And there's a lot of really good content for you to check out, how to invest, how to build passive income, etc. I have everything for you. So that's it, guys. I have unpacked everything when it comes to the latest market downturn here in the summer 2024, as well as how to approach this with a Buffett mindset of thinking about this as an opportunity. So I hope you guys enjoyed it. If you did, make sure you guys smash that like button and leave a comment of how you're approaching this investment cycle. And as always, I have everything for you when it comes to investing. And if you want to get a little bit of a beginner's guide of how to actually get started, check out this next video where I unpack how to invest for beginners. So that's it, guys. I appreciate you guys rocking with us. Take care of yourself, take care of your people, invest wisely, and make smart money moves. And I'll catch you on the next one. Peace.